Carmakers get breathing room in electric vehicle transition, but global markets reel from Trump's tariff shockwave. The automotive industry is navigating a turbulent landscape, marked by a double whammy of technological upheaval and escalating trade tensions. While carmakers are receiving a degree of leniency regarding their electric vehicle (EV) transition targets, a much-needed reprieve amidst the complexities of this monumental shift, the global economy is reeling from the seismic impact of President Trump's sweeping tariff increases. Last Wednesday's announcement unleashed a wave of uncertainty, triggering a staggering $5 trillion, £3.9 trillion, wipeout from global stock market valuations. The imposition of a 10% base duty on imports into the U.S. from the UK and a hefty 20% tariff on goods originating from the European Union, Britain's largest trading partner, sent shockwaves through international markets. This dramatic escalation represents a significant escalation of the trade war, leaving businesses scrambling to adapt and investors nervously assessing the fallout. The immediate impact is palpable. Jaguar Land Rover, a prominent player in the automotive sector, has announced a temporary suspension of UK-made car shipments to the US for a month. This strategic pause allows the company to carefully evaluate the ramifications of the new tariffs and formulate a mitigation strategy to offset the increased costs. The 25% tariff, levied by the U.S. on imported cars and light trucks, which came into effect on April 3rd, is clearly forcing difficult decisions upon manufacturers like JLR, and many others are likely facing similar dilemmas. The increased costs will undoubtedly impact pricing for consumers, potentially dampening demand and further complicating the automotive industry's already challenging transition to electric vehicles. Beyond the immediate consequences for specific businesses, the long-term implications of Trump's trade offensive are far-reaching and deeply concerning. The initial optimism expressed by some regarding the potential benefits of a new global economic era now appears overly naive in the light of the significant market instability. The current situation necessitates a critical reassessment of economic strategies, both at the national and international levels. Governments face the daunting task of navigating this complex landscape, balancing the need to support domestic industries with the desire to maintain stable international trade relationships. The uncertainty created by these unpredictable tariffs creates a climate of fear and uncertainty, hindering long-term planning and investment. The automotive sector, already grappling with the immense technological shift towards electric vehicles, now faces an additional layer of complexity. Meeting EV targets becomes even more challenging when coupled with the added burden of substantial import tariffs. The increased cost of components and the potential for reduced sales due to price hikes could severely strain manufacturers' resources and delay the crucial transition to a more sustainable transportation future. The situation calls for decisive action from governments and international organizations to de-escalate trade tensions and foster an environment conducive to both economic growth and the vital transition to cleaner transportation. The coming months will be crucial in determining how businesses, governments, and consumers will navigate this treacherous path and mitigate the risks posed by this unprecedented economic disruption. The interconnected nature of the global economy means that the effects of these tariffs will ripple outwards, impacting not just the automotive sector, but numerous other industries and economies worldwide. The need for effective diplomacy and a return to predictability in international trade is paramount.